Welcome to Friday Takeaway. Xiaomi will IPO this year in either Hong Kong or New York, and they've hired Goldman Sachs and Morgan Stanley to help. Xiaomi's valuation is said to be around $100 billion and potentially the biggest tech IPO since Alibaba in 2014. Japan will soon revamp how it measures GDP by including new consumption trends like the sharing economy and the changing quality of education and medical services. Critics say Japan's data is not accurate and does not account for evolving private consumption trends that account for nearly 60% of the economy. Now, cryptocurrencies plunged this week on new regulatory clampdowns. The Chinese government is targeting online platforms and mobile apps that offer exchange-like services and centralized trading. South Korea is also trying to tighten control over crypto trading via taxes, stricter regulatory scrutiny, even an outright ban. But South Koreans aren't having any of it, with over 200,000 people behind a fierce grassroots backlash. On to the FBM KLCI. As at 10 a.m, the index is up 0.2% to 1,825 points, barely changed from last Friday's closing. Year to date, the KLCI is up 1.6%. Next up, some big weekly movers. Top Glove Corp Berhad. They're the world's largest rubber glove maker, and this week they agreed to buy rival glove maker Aspion for 1.4 billion ringgit from Adventure Capital at 16.9 times forward earnings. Now, Aspion comes with a 2-year profit guarantee plus potential incentive payments. Now, Top Glove stock is on a tear, up 80% in 12 months and 30% in the last month alone. Today, they're gaining again, up another 0.4% to 9 ringgit and 17 cents. It's not all rosy though. CIMB has reminded investors that raw material prices like latex and neutral butadiene are spiking, while a weaker US dollar will hurt their mostly overseas earnings. Now, also, CIMB has raised the forward EPS guidance on Top Glove by up to 20% to reflect Aspion's earning contribution, and as well as maintain their ad call with a higher target price of 10 ringgit. UMW Oil and Gas Corp Berhad. They're an oil and gas services provider with drilling operations, oil field services, pipe making and oil field products. Now, their shares have been heavily traded in 2018, consistently above 100 million in daily share volume. They've been bid up in tandem with the oil price rally. More recently though, they've also announced a contract win to offer hydraulic workover units for Petronas Carigali in a 3+1 year contract until 2021. Today, they're rebounding from yesterday's sell-off, up 4.4% to 36 cents, but UMWOG have been through the ringer this year, surging 33% in 1 month before slumping back 17% in the last week. At $70 per barrel, oil prices are dizzy from the heady heights, and the oil rally seems to be losing momentum, while Hong Leong adds the earnings from the Carigali contract remain insignificant for now. Moreover, the exact financial impact is difficult to ascertain because it is based on a work order basis, and margins are remaining thin at 6%, as Petronas likely is staying conservative in quoting their work orders. The Hong Leong have maintained their forecast at a whole rating with a target price of 40 cents per share.